So you spent 4 years in Multicoin now. Recently, Multicoin completed 7 years, right? So congratulations on that. You started as an analyst, you then grew up the ladder, you became an associate, and now you're a partner, right? Your second name is Deepan, right? You started your career as like Web2 sales, which is BD as well, right? And then you did product management in the real world. Keeping all these things aside, who is Shayon and what's your story?
So yeah, I grew up in New Delhi in India. I'm an only child.
Yeah.
I'm
an only child as well. That's good.
But I was always had an interest and a passion for maths. Or math as they call it in the US.
Yeah.
And so generally found that I was pretty good at that stuff in school, and then ended up being fortunate enough to come to the US to study math at the University of Chicago, and I had big dreams of becoming an academic. I wanted to get a PhD. I wanted to go down the route of doing net new research. And then about 3 years into that in college, I realized this is not the life for me.
Yeah. Being a thought leader is better.
Yeah, being a thought leader, yeah. People were telling me there's a separate career in thought leadership that you can do.
Yeah.
So long story short, I was trying to figure out what to do. At that time, the canonical answer for what you do if you're not going into academia is you're going to banking, consulting, or tech. And so I ended up not having that much of an interest in the first two, but I had friends around me who were starting companies or advising for companies and involved in new company creation, which I thought felt like the kind of place where I'd have a little more agency and less bureaucracy. And so I ended up, just experimenting, like getting involved with friends' companies, doing sales for an enterprise software company, helping a friend start a open door competitor, and we can talk about what that business, how that business actually works.
Yeah.
Side note, it does not work. But really just trying to get hands on and trying to understand what it takes to start something from scratch and try to turn it into a lasting big enterprise, and sort of falling in love with all of the things in the equation there and that journey as a whole. And so I think I'd always wanted to be a founder or be involved in that process somehow. And then, fast forward to 2020 when I sort of formally got involved full time in a capacity investing in crypto. I think my original intentions, if you asked me at the beginning of the year, would have been to, have started a company. But Kyle was hiring for an analyst at Multicoin, and we ended up having a ton of overlap in terms of at least how I was thinking about the world. And I've been investing then, but my investing style has still been very operator centric. I like to get deeply involved with my companies and sort of be on that journey with them, at least for the first 12, 18, 24 months. And then obviously later on as well. But, I think if my job is to produce alpha, uncorrelated alpha in whatever way across, different stages, I have to find out some way in the market to do that, and for me that is operating leverage for the companies that I work with. And so I'm just really excited about seeing new companies get formed, solving new markets, solving problems in new markets that you could not solve outside of crypto coordination primitives. And happy to go into more detail, but that's sort of like a quick rundown of how I got here.
Good.
Yeah.
So you did like bachelor's in math, right?
Mm-hmm.
Were you a bright student then? Like did you enjoy doing
I was. I'd say for the first 2 years I was pretty bright, and then I started feeling very stupid in my third year.
Yeah.
So I started taking like graduate courses, and where like the real academic, like true to life, like guys who are supposed to be spending 15 hours a day solving proofs.
Yeah.
Once you put me head to head with them, I was like, I'm not the guy for this, So I was pretty good for the first 2 years, and then as things got more and more abstract and more complicated, I found myself having less of that edge that I used to have in high school and earlier, where I feel like I was the top guy. That started to fade away a little bit more.
Yeah.
Which is why I
When they
decided
started
to-
introducing alphabets in math, I was like,
It's too much.
this shit is not for me, man.
This is mostly. I used to have memories of going into lectures and just like watching this professor just like draw shapes on the board.
Yeah.
What are we doing here?
Yeah. Similar to crypto, right? No one knows what's happening.
No one
Everything
knows
is
what's happening.
imaginary.
Yeah. Provider in buying and selling houses in a short time horizon.
Right.
And this is sort of the business that Open Door had sort of started, and that Unlock was doing that at scale. Zillow and Redfin and all these other, real estate data providers and consumer products also had operations around this. If you sort of wind the clock back, you'll be able to see that all of those businesses have been deeply unprofitable. And there's a lot of interesting reasons why that model doesn't actually scale. But we were trying to do it in a hyper local capacity, specifically in Austin, Dallas, and certain other metros in the Texas area, because that's where residential real estate was sort of on an uptrend. And I think among the reasons why that business is very hard to do right is because houses are NFTs functionally, there's so much variance in a single piece of real estate that no matter how much data you have available through alternative providers, there are 50 nuances around each individual property that are not often possible to capture in a digital representation. It's that model doesn't really scale. I mean, you can run it, but the margins don't actually get any operating leverage in that business, and you get to 1,000 or 10,000 businesses homes versus like whatever 50.
Right.
So it was around early COVID that wound down. But my job there really initially started off with we had like this mobile consumer app where people could like sort of visit the houses that we had on inventory without having to check in with someone. And then we automated things like brokerage and applying for a mortgage, and it was really full stack. And we were essentially a tech-enabled solutions provider for a market that was opaque. That was not so opaque, but like opaque enough that you could create meaningful margin compression by automating some of that stuff. And so I was sort of like, one version of like unlocking new markets or using technology to sort of take an antiquated market structure and fix it. And I sort of oversaw pretty much everything from running portions of our data science team to changing the size of a certain button to figuring out which next market we should go after. And I think being in a startup that's not like hyper growth accelerating is a weird, scary, stressful thing at all times.
Right.
But it's still a lot of fun, and I think being involved in that and seeing the potential of like what could this become, that's an infectious thing. And I wanted to keep doing that across a bunch of different companies, across a bunch of different markets, and that's why venture made sense, I think, as a next step. Yeah.
And before this, like you started your career and you spent like a small time in SAP doing like Web2 BD, which is like sales, right? I feel VC and Web3 are like very similar. VCs are just like BD people wearing like better capitalistic hats, right? And with deeper pockets, right? Because you're always selling, right? Like initially when the fund is like new, you're like raising funds, so you're selling your thesis. After that, when you're deploying capital and you've deployed, you're now selling your conviction in a project so that other people buy it, right? And now when the project is live, you have to sell your bags to get like exit, right? So similar, right? What do you think about like VCs and BDs? How similar are they?
Yeah. Well, first of all, shout out Artemis. We're not invested in Artemis, but John is a friend, and I like this guy. No, yeah. I mean, like those are the two main things. It's like I think it's like an Naval quote. It's like you're either building a product or you're selling.
Yeah.
And you have to do you have to do either one of those things or both of those things exceptionally well to like build anything.
Right.
And venture like funds are a business. People who are deploying capital are a business in themselves, and in any business, there is a product and there is a sales motion, and the product is selling capital and expertise and assistance to founders. There is a huge amount of selling in every step of that process. Raising capital, which I'm less involved with. We have fortunate super competent investor relations team led by Matt on our side. Most of my selling is, at the founder side, which is, if I found something I fall in love with that I want to work with, convincing that founder to take my money in a market where there is potentially, much cheaper capital available elsewhere. And then, basically from day one, every single day is a process of sales. Marketing is sales. Business development is sales. Recruiting is sales. To some extent, product is also sales, right? Like the way you design incentives and the way you give up, do user acquisition in crypto, that's all sales, right? And so there is a perennial job of convincing people to care about you, and it's something that is weirdly underdone and also overdone in crypto. Like there's obviously like a real attention industrial complex between podcasts and social media type things. But yeah, I think these are all this fundamentally mentioned as a business about people, and inherent in that.
And it's interesting how so many of these funds and entities, when they go big, they launch an ecosystem fund, right? There's always that BD and ecosystem teams which are leading their fund, right? Like similar thing happened in Polygon Venture, same thing happened in Arbitrum with the Tandem thing, right? And now Panda Foundation as well. It's always the same thing. So there are very balance that you can do, right?
Yeah, it's all a process of look, I've read something. Someone please pay attention. and it's I have a lot of respect for the guys who do that. I know BD is sort of a meme, it's not really clear what these people do, but when done correctly, it's one of the most important functions. It's product and distribution are the things that make up a business. Product in and of itself is not sufficient.
Finally, thank you so much for saying that.
Yeah.
So many founders feel that, we built an amazing product, now the users will come automatically, right? Which is not a function.
They will never.
Yeah, there's a reason why meme coins have more distribution than so many of the good utility tokens.
Right. And it's all because the most valuable thing, and this is sort of a whole part of my investing process, is one of the most scarce things is attention.
Right.
And your ability to own attention, whether it's in the form of a 30-minute call between a BD person and a founder who you're trying to convince to build on your chain or your environment or use your primitives, or a well-recorded podcast like the ones you do. It's all in the business of accruing attention from people. And that is, it's inherently scarce. You only have so many minutes in a day. People find that time valuable. People want to be spending time thinking about things and participating in things that they believe is going to yield, some sort of return for them. And the job of articulating what that is and doing it in a way that is clear and concise is not simple, especially in an industry like ours where there's so much jargon. So much new language, and it's almost sounds sometimes it feels like it's inherently designed to keep. Yeah, it's designed to keep people gasping. They don't understand what's going on.
It's nice that you brought up attention, because I feel one thing that Multicoin does really well is in terms of, I don't want to call it shilling, but just evangelizing and showing why you have so much conviction in the thesis, right? And it all boils down to signal, which always helps right? Let's talk about Multicoin now. 7 years you guys just completed. Out of that, 4 years you've been with them, right? To quote Kyle quoted that amazing thread, and he was like, I want to thank all my team. There are only 18 people in the entire fund, but only 5 in the investments team, right? And he said that we do not formally segment coverage by vertical. I do not tell anyone what to focus on at all. You either figure out what needs to get done or you get fired. Seems like a fun person to hang out with. No, I'm kidding. How is Multicoin job?
Yeah, it's a very special place. Well, first of all, I think I'm pretty lucky to have had the chance to kind of learn the craft of of investing from that specific group of people.
How did you find Multicoin and crypto? Let's start with that.
Yeah, well, so I mean, I think when my previous company was winding down, I was thinking about, and I'd sort of been adjacent to crypto for a while. I had a roommate in college in 2017 who was in a chemistry PhD program who had made a ton of money on Ethereum, and he was like considering dropping out of his program. And I had watched him lose all of it as well, like within the span of 2 months. And so I was somewhat hesitant, but I had seen, other friends start to get involved in a bunch of other early stage, products in crypto, like early DeFi days, 18, 19. I was thinking about in 2020 about where market structure was headed. I think compound farming was happening at the time. Uniswap was like, it could have been fair to say that Uniswap had some notion of PMF. And so I was thinking about the derivatives, on-chain derivatives design space a lot. And then I shared some of those thoughts with Kyle, who had just reached out, had posted cold that he was hiring an analyst. And then, we had
You just cold DM'd him?
Yeah, pretty much.
Sweet.
And then, I spoke with everyone else on the team, and it was maybe like a month-long process. Right?
And this was 2020?
Yeah, mid-2020.
Okay.
And then, came on in like mid-2020, and I think it was September of 2020, and have been investing since. And Multicoin has sort of changed and evolved its strategy over time. When I came on, we had a partner in Asia who was doing a bunch of deals there. We would, try to do more opportunistic event-driven liquid stuff. I think the last 4 years have been, for me, about kind of defining my own personal strategy and figuring out how to leverage the firm's resources and the platform that we've built over time in order to sort of do the best work I can on the venture side and on the liquid side. But, I think the thing that's most important when we talk about the investment team is like a really core focus on thesis construction and market structure.
Right.
First, this is like another one of Kyle's memes, is like reasoning by analogy actively leads to the wrong conclusion. You'll see him post this pretty frequently, and there's like a very deep truth in that about first principles thinking and first order thinking. I think that's sort of been ingrained in me through, we have 2 investment committees a week. I've been doing this for 4 years, so it's been over 400 investment committees that over 400 investment committees at this point.
What happens in an investment committee? What is an investment
committee?
committee?
Well, an investment committee is, it's a 2.5 to 3 hour block, depending on, the session, where the members of the investment team come together, and usually we have, somewhere between 5 and 7 pages in a Google Doc, in the form of an investment memo for either a new deal that we're considering, continuing to follow on in an investment for an existing deal, or, a position that we're taking on the liquid market where we've laid out our thesis, and every investment memo starts the same way. Thesis summary: why does this present compounding returns and risks? And then there's like obviously a lot more detail on market structure, product background in the middle.
Right.
So we put this writing together, and each IC starts the same way, which is the memo's there. People have read it in the past, but we try to add comments synchronously.
Right.
So it's like silent. You start off with IC, we start with a topic, there's maybe 5 to 10 minutes of pure silence. And then this document that, let's say, I've put together for a new deal is just getting hammered with questions from Kyle, Tushar, Matt, everyone else on the team.
Yeah.
They're just trying to rip it apart, basically, right? So that's the start of the conversation.
All right.
And then
very friendly work environment
super
at
friendly.
Multicoin.
It's amazing. It's the best. It's good because like the way we think about it is a truth-seeking exercise, right? If a memo has holes in it, it should be exposed by everyone else.
Only a true hater can become a true fan.
Only a true hater can become, exactly. And I think that practice, that style of trying to arrive at truth about what is the opportunity we're looking at. I think it reveals a lot more about what we do and how we think about investing than you would sort of like initially think, because it is a collective truth seeking exercise. Like, we're all sort of trying to look at this opportunity together, trying to figure out if we are uniquely positioned to help this increase the probability of success here.
Right.
And it gives us more precision on the range of outcomes before we deploy dollars and time and attention and love and care. Because as you were saying earlier, right, like we spend a lot of time post investment. Like, our investments are our champions. We only succeed if our investments are doing the best they possibly can. So each commitment is, it's a 10-year process, right? We write a check. If I were leading an investment, it's kind of like it's an extremely long relationship that we've sort of committed. And so you want to make sure you have the best possible information, and you cannot have perfect information at this stage, right? You're only underwriting certain things. So that's the core action of the investment team.
This is a beautiful insight. Like, I don't think a lot of people know how an IC call like goes through, right? So I really love that. Can you double down? I know that like your last fund was like a $430 million raise, and that was like, I think 2 years ago, right? What is how do I structure it? How is the fund structured? What kind of deals do you guys prefer? What is like your check size? Like everything, like a TLDR of Multicoin, right? For all people who want to raise from Multicoin.
Right. Happy to. And so just like a little bit of background. So the firm has a hedge fund and a series of venture funds. So the 70 anniversary, so the first fund that the firm operated was the hedge fund.
Okay.
That's our liquid vehicle where we take positions in open markets. And then we have a series of venture funds, or a third venture fund, I think the one you're talking about was raised in 2022. I think publicly announced was $430 million. And in that vehicle, we exclusively do private deals. That's our venture fund, and I think it's very unique because the vehicle is truly stage agnostic. There are checks in that vehicle right now that are less than $1 million, and then ones that are sort of like mid 8 figures, candidly. And not just out of that vehicle, we'll like structure it with certain allocation for hedge fund, potentially an SPV together, but like part of deals that are very large sizes. We are stage agnostic, so we'll invest in everything from seed to series, A, C, D onwards. We generally prefer to be early rather than late. We generally prefer to lead rather than follow, and we generally prefer sort of crypto native things that are uniquely enabled by crypto and things that are not. And so what that means is that I think I spend the bulk of my time at the firm, and everyone on the investment team has their own strategy. I think we all come together and collectively form things, but everyone focuses on what they are uniquely positioned to do better than anyone else. And for me, that is kind of twofold. Like I said, my source of alpha, I think, is operating leverage. So, the kind of stuff that I focus on is stuff at the earliest stages, sometimes pre-incorporation, where we know the guys who are working on, have some insight on a new market structure, either potentially worked with them before or are helping them kind of put the business together. So super early stages where the check size can range from somewhere between $2 to $4 million, and then the other is potentially open market deals where we are potentially the asset is live and it's liquid and it's trading, and we are trying to we recognize that there is an opportunity to go in a different direction, or we feel like we have some expertise in either bringing in talent or helping inform distribution strategy, and essentially taking a position on the open market, and then try to inform or support strategy such that we can see the asset doing a little bit better. So maybe those are two ends of it. So the bulk of my investments, I think, are in that sort of $2 to $4 million, like super early stage range. But if you look at the deals we've done this year that have been publicly announced, I think there are things that range from $2 million checks to $20 million checks, and those are at different stages at seed, A, B onwards. So yeah, there's a real variance there, but I think the preference is earlier rather than later, and then really sort of buckling down
Right.
and making sure.
And how is the fund structured? How many GPs are there? How many partners? Like, what
Yeah,
is the
so Kyle and Tushar, who are managing partners of the firm, co-founders, who are, as I was saying earlier, like, you know, some of the best people in the industry to learn the craft from, but also just like really good people.
Right.
Like, you know, they've shown, you know, consideration and kindness that I have no business receiving. So they lead the firm. And then Spencer and I are on the investment team, focus exclusively on investments.
Right.
We have another partner on the investment team, Matt Shapiro, who also leads investor relations for us. And then Vishal and Eli are also on the investment team doing stuff. And then collectively, that's it. That's all the people on the investment team. Everyone, like I said earlier, has different strategies. Like, you know, Vishal spends a lot of his time on, you know, the liquid book,
Right.
structuring investments and finding ways for us to do sort of large transactions on the open market. Eli, who's an analyst who joined us last year, has been kind of focusing on consumer products and
Right.
you know, playing around in that space. Spencer loves DeFi things.
Right.
What
do you love? Deepen?
I like deepens. Yeah, I spend a lot of time doing
Yeah.
early stage deepens, late stage deepens. I do think that it is.
You can't sleep without saying deepen once a day.
It's
Yeah.
hard.
Yeah.
We can't. It's not fair to do this interview without doing that.
Yeah. How is the fund structured? How many GPs are there? How many partners? Like, what
Yeah,
is the
so Kyle and Tushar, who are managing partners of the firm, co-founders, who are, as I was saying earlier, like, you know, some of the best people in the industry to learn the craft from, but also just like really good people.
Right.
Like, you know, they've shown, you know, consideration and kindness that I have no business receiving. So they lead the firm. And then Spencer and I are on the investment team, focus exclusively on investments.
Right.
We have another partner on the investment team, Matt Shapiro, who also leads investor relations for us. And then Vishal and Eli are also on the investment team doing stuff. And then collectively, that's it. That's all the people on the investment team. Everyone, like I said earlier, has different strategies. Like, you know, Vishal spends a lot of his time on, you know, the liquid book,
Right.
structuring investments and finding ways for us to do sort of large transactions on the open market. Eli, who's an analyst who joined us last year, has been kind of focusing on consumer products and
Right.
you know, playing around in that space. Spencer loves DeFi things.
Right. What do you love? Deepen?
I like deepens. Yeah, I spend a lot of time doing
Yeah.
early stage deepens, late stage deepens. I do think that it is.
You can't sleep without saying deepen once a day.
It's
Yeah.
hard.
Yeah.
We can't. It's not fair to do this interview without doing that.
Yeah.
But I'll just spend a lot of time. The way I articulate it to people is, there's two things that are scarce.
Yeah.
There's attention and block space.
Right.
And so I want to invest in things that are super close to the L1. So things like MBV markets, LSDs, oracles, bridges, interop solutions, things that are like very close to like touching or reordering transactions around block space. And the other is things that are at the application layer. So things that own customer attention. And so the insight there is that, you know, given those two scarce quantities, attention and block space, the closer you are to owning them, the more defensible your business is. If you are sort of getting sandwiched in the middle, which is not to say there aren't really strong middleware businesses out there, I just find it harder to underwrite the sources of scale and compounding in those businesses because it's, you know, they're more competitive markets and more competitive goods.
Right.
And so, you know, some of the investments out non-deepen investments, we can talk about Helium and Render and IO and HiveMapper and all those things if you so choose. But some of the things that are closer to the L1 in this thesis that I'm talking about are things like Jiro or Fastlane Labs or Pith.
Right.
These are all things that are so foundational to how block space gets used, but still not explicitly, the L1 asset itself.
Right.
I think those are the real points of operating leverage. And when I say applications, I put deepins within that. I think a lot of people think of deepins as quote unquote infrastructure, but it's clear to me that they are uniquely enabled by crypto sort of net new application because just because the supply side is consumer facing and the demand side is often not consumer facing doesn't mean it's not a consumer product.
Right.
Like you can't tell me that someone who buys a Helium hotspot and installs the Helium wallet app on their phone is now not part of a consumer application experience in crypto.
Right.
And that's true for every other supply side network. So I've heard a very narrow definition of consumer and a very narrow definition of infrastructure, but I do think that these are the places where compounding returns can be pretty easily generated.
Right.
And so I do that at the early stages, and I do that at the late stages.
Right. One thing I'm really intrigued about, I know you mentioned that you're mostly on the investments part and not on the fundraise part, but I'm really intrigued about how funds your size raise this much capital, right?
Yeah.
Like who are like some of these LPs? How do you find LPs for a $430 million week?
Yeah, so Matt leads our investor relations team. I think we're fortunate having been one of the earlier crypto funds in the space to have been able to accumulate a set of institutional LPs. So we have endowments and pensions and sort of large sticky capital allocators in this fund and potentially in the future. And then a good chunk of the capital in this vehicle is from the investment team itself. So Kyle and Tushar are big LPs in the fund. But yeah, fundraising crypto is for venture fund in crypto. It's interesting. I talk to my friends who are running funds, and at the earliest stages, I think it's almost always friends and family offices with an opportunistic mandate. And then as you sort of get to fund 2, fund 3, fund 4, there's a switch that flips where you suddenly become attractive to institutions. And
you've reached that stage.
Touch wood, Multicoin has reached that stage, and so I think a major chunk of the capital is from there. I don't think I'm at liberty to say specific names about who those are, but you can sort of guess given some of the names that you see that have taken an interest in the space.
Who do you guys usually co-invest with? Like who's your go-to fund for like sharing deal flow? Like come brother, we'll all invest together.
Yeah, so I think that's a culture that you go to traditional venture, that's like not a thing that happens. Like Sequoia is never sharing, like never calling up Benchmark. It's like, hey, I got this A deal. Do you guys want to do this together? Like it's very much explicitly, you want to take the whole round.
Right.
And candidly, that's how we operate as well. Like if there's something that I like at the earliest stages, or at an A or a B,
right,
I am most likely going to want to do as much of it as I can. And so as a result, there aren't individual firms, I think, across all of our investments that we have co-invested with, repeatedly on. I think for each deal, there is a specific, we can think of certain other investors that we think are specifically useful to that deal or to that founder. So, I think let's take Crunch Down, which is a deal that we announced a few months ago. That team is building a distributed machine learning product where engineers from all over the world can sort of contribute open data science problems and receive rewards for solving them better than anyone else. And so we pulled in Jake from Factor Capital, who is we spend a bunch of time on the quant team and keep operating expertise with a set of customers that these guys are going after. And so, we called him up and said, hey, would you be interested in taking a look here? And it's been a great partner to them and has been sort of uniquely helpful in helping them build out their business. And so it's really on a case-by-case basis. Is there a single investor that we can think of in our network who would increase the probability of success for this company?
Right.
And so that changes based on the deal. That changes based on the founder, based on the stage, based on the market. And so I wouldn't say there's one specific company, there's one specific firm that we work most closely with. But that said, there is this culture within crypto of talking about what you think is interesting and
Right.
who's putting things together, and that's a lot more widespread. That's just hanging around in New York and going to dinner and seeing people and asking
Right.
them what they're looking at. So.
Another interesting thing that I noticed is that, so you were a builder before you became a VC, right? And I'm sure that added a ton to your lens of judging projects, right? Over the last 4 years at Multicoin, you've sort of like honed that skill, right? As partner of Multicoin, break down the art of judging a project, right? And also, so do it from a lens, from two different lenses. One, from a lens of an investor, what are like the 5 points or like 3 points that Multicoin looks at when investing in a project? After that, do it for like retail people or like operators like us in the space, right? Like when I am looking at a project, what should I look at? Because there's so much noise on crypto Twitter, right? Like I don't want to waste time on that, right? I don't want to see, oh, this project has like 100K followers, so this is going to go moon, right? I want to see what are the fundamentals that you look at.
Yeah. Yeah, great question. So I think maybe I'll start with 3 things.
Yeah.
So if I'm looking at, let's say I'm starting from scratch and I
Right.
just received a deck for something that's
Yeah.
like hasn't raised any capital.
3 things
prior.
that you look as Multicoin partner before putting in money.
Right. So I think the first is a unique insight about the market structure. I think the second is this uniquely enabled by crypto? And the third is there some sort of distinct product or distribution advantage that is baked in structurally into the product? Okay. So I'll kind of go over all of them one at a time. I think the single most important thing is a unique insight about market structure. So ideally we want, when I look at a deck, I should be able to see in the first 5 slides, have you understood something or told me something about a market structure that is not intuitive, or that you're willing to kind of stake your version of the product or your business on, which is, in the case of, let's say, Gradient Network, which is a CDN that we invested in most recently, it is this understanding that there are production grade content caching and delivery networks that operate in the world today that don't use data centers, that just use mobile phones and consumer devices. And we understand what that orchestration looks like, and we know that we can apply it to these 3 markets specifically. Simple. Like that's the insight. It's like, I know this works here, I can make this work here. So some sort of specific insight about the market structure that, it's hard. You're coming up with something new in the world, but some configuration of like either how you're seeing the product or how you're seeing the market that is an articulation that I have not heard before or is not intuitive, and you believe deeply to be true. So I think that's one. The second is this uniquely enabled by crypto, and this is more around, we consider it our mandate to invest in crypto and crypto adjacent tech. There are a lot of businesses that are effectively wrappers over traditional products, or like if I can think of a reason that this company can be built without crypto rails, I will not be that interested in investing in it. And then the third is some sort of product or distribution advantage, which is, are you uniquely equipped to build this product, and are you uniquely equipped to sell it? Which is to say that, do you know with a very clear degree of precision what this thing is going to look like in 6, 12, and 18 months.
Right.
You have a kind of straight shot of hiring the people you need or bringing on the salespeople that you need in order to build and then sell this product. And can you tell me with precision the exact order of operations that are going to happen in this company if you receive the funding that you are looking for? How are you going to allocate it? And what does this thing look like in 2 years?
Right.
Very, very clear.
Right.
And I think the companies in our portfolio that have done the best and the ones that I'm most proud of and most excited by, all universally have very strong answers to those questions. Now, they may not be, right? Things change very quickly. People pivot in 9 months. People try something new. But all of those founders had very clear answers to those questions, and they had conviction in them. And then obviously they change, those things are very important.
One thing that is like slightly contradictory here is that you also mentioned earlier that you enjoy doing really early stage deals where you help the founders figure out, right?
Yeah.
And it's very difficult for an early stage founder to have all the answers clearly. So how do you balance this stage?
Yeah, well, the ones that we do at the earlier stages are the ones where they have. We don't do. I'd say, we've written. I think we've probably done between 10 and 12 deals this year. We're certainly not, deploying at a pace where we feel like we have to.
Right.
It's deeply opportunistic, and it would surprise you, even at the earlier stages, how much clarity these guys have on the markets that they're going after. So that's what we're excited about, right? We want to partner with people who are opinionated, who view the world in a way that is sort of counter to what someone else is seeing.
Right.
And they have conviction in them. So yeah, that's on sort of what we look at when we're investing. I think post-launch, which was I think the second part of your question, is how does an asset, how does asset pricing happen in public markets, and how involved is the GP in that? My general response to that is, you should really not think about it. It's very hard. Liquidity in crypto is a blessing and a curse, and it is, as something Kyle likes to say, it's like once a token is out there, it's your biggest superpower and your biggest liability.
Right.
Because you're suddenly a guy who was out in the market raising on a deck, and then 2 years later you're the CEO of a public company. You're a Discord full of people saying, why isn't the token going up?
Right.
It's not an easy position to be in.
Yeah, in Web2, people, companies spend 10 years before going
It takes
public,
10,
right?
12, 15 years.
Yeah.
People have pricing models. People have multiples. You can the range, the volatility is much lower. Crypto is just weird. We, the sort of short-termism of get price to be high in the short, in some constrained period.
Right.
It's just boring. We want, our ideal outcome for companies is that we invest and then we hold on to it forever until the fund is finished, and then we're basically distributing capital back to our, distributing tokens in this case,
right,
back to our LPs. That's the ideal outcome. We never want to even think about public markets. Kyle also has another quote, prices only matter if you look at them. So we should not, we ideally want to figure out how the tokens are sometimes uniquely required, right? Helium would not exist if there wasn't an HNT token, right? So to that extent, the price matters for carrying out the thesis. But I don't think we care on a given month or a given year or on a given 2-year period where things are trading. If we believe the core thesis is valid and compounding, we want to just see that happen, every 3 years, every 6 years, every 9 years. It's a much longer time horizon that we ascribe to our things. And as long as the thesis is valid, the price in the short term is sort of irrelevant.
Right.
And anything that you do in order to sort of, the more you think about it, or the more you structure your life, in the same way that public companies sometimes stop innovating because they become obsessed with revenues and revenue preservation, or need to grow at a certain range and they can't really, take more risk in that way. something similar happens, I think, in crypto, and when you're like, oh, there's not enough attention around this thing.
Yeah.
I find that to be quite destructive, and we generally advise our portfolio companies to not care about the price in the short term and just continue to focus on building out a product that people will remember and use and care about in 3, 5, 10 years.
Right. You mentioned that when you were about to join Multicoin, you cold DM, right? So cold DMs work, right?
Yes.
Now, what's a perfect cold DM template for someone who wants to reach out to you or Multicoin so that they can pitch their ideas?
Yeah. Great question. Cold DMs work is the right answer. My DMs are open. Kyle's DMs are open. I don't know how Kyle's DMs are open. Like I probably gets like 20 cold DMs a day.
Right.
Everyone in the investment team's cold DMs are open. I think the ideal cold DM has 3 things as well. The first is that it's short. The second is that it is articulate and concise, and it tells me everything I need to know within, call it, 2 paragraphs.
What is it that you want to know?
Yeah, and the third is that it is, it has something that I can look at to get more information.
Okay.
So, whether it's a deck or a one-pager or a video or a demo or whatever, like, I want to be able to see something of substance. And the thing that I'm looking for in the cold email is, this is my core insight, like I was saying earlier.
Yeah.
Which is, that's the first thing we look at is like, I believe X, like strong claim about the market that I'm operating in. So I think it starts off with, this is the insight.
Right.
And then baked within that insight, I'll be able to tell that this is the product, this is the market, this is what I'm trying to prove out.
Right.
And then it'll also have within it the other 2 things that I was saying, which is like, why is this uniquely enabled by crypto, which is some idea about what you're doing on crypto rails. And then the last piece, which was a unique ability to build the product to reduce sales,
right.
Which is, this is how we've structured it. Like, this is what we've done so far. This is what we're trying to do in the next 6 months, 9 months, 12 months.
Right.
And all of that sort of combined in, call it 200 words. And I can tell you, there are some cold emails that I've just, like, I look at it and I'm like, this is amazing.
Yeah.
Because it does that so concisely.
Yeah.
And it's a perfect starting off point, because then you can, then we can hop on a call and then we can kind of discuss.
Do you have some of these? Like, can you share these with me later on, and I can like add it to the
Happy
video?
to. Yeah, I can send you for like many of our, like, I think there's a handful of our investments that are cold emails to us.
Right.
Right. It's not all founder referrals and
right.
like warm intros.
Right.
I'm pretty sure there's a handful of these. So I'll find the ones that we invested in.
Amazing. That would be very helpful. So, okay, so now I have cold DM'd you. Now I'm in touch with you.
Yes.
Can you walk me through the entire process of deploying capitals from Multicoin?
Yeah. So you send a great cold email.
Yeah.
You hit the 3
I'm
things.
amazing at that. Yeah.
Yes.
I cold DM'd you for this.
Yes, and it was great. It was awesome. It was a great. It was. I think it was like, it followed that same method. Like, this is my podcast. This is my product, my distribution. And why is it uniquely enabled by, well, I got a good friend. Great. Uniquely enabled by you. So, so let's say I have all of those pieces. At that point, I have to essentially figure out whether this is a large enough market or interesting enough, or I am uniquely positioned to help you. But it's not a one-way. The fundraising is not just like you're taking capital from like someone and like they say, bye, I'll see you in years. I have to know that I'm able to help this business succeed in a way that no one else can, right? So I have to understand the market structure, and I have to understand, essentially validate the assumptions and the hypotheses that you have presented, right? And so I'll spend a little bit of time, go home and do some homework, and then ideally I'll have all the materials that you have available sent to me. So at this point, we're doing a back and forth, and I'm asking you questions.
Right.
And you send me all your materials. I've gone through all of them. Only at that point are we setting up a call or meeting in person or doing whatever to, for me to like understand who you are and get to know you and see if there's, some way to fall
Substance
in
there.
love
Yeah.
and do this together. And so assuming that goes well, I will write up a memo and I'll bring it into my investment committee and we'll do that process that I told you and the rest of my
Right.
partners will do.
Okay. And a memo is what?
Yeah, so the memo is essentially 5 to 7 pages.
Okay.
It's
There's a
got-
lot of 5 to 7 pages documents in Multicoin.
No, this is the same memo.
Oh, it's the
that I was
same one that
saying.
we, okay, the one that we,
okay.
okay.
Yes. and
That
it's-
goes around the investment.
Correct,
Okay,
correct.
got
So
it.
it's an investment memo.
Right.
It is where I'm basically laying out the case
Right.
to invest to my partners. And it is, it's interesting because it's like that process of writing that 5 to 7 page document really forces you to be very clear about why is this business unique and why are we uniquely positioned to invest in it. And those are functionally the questions that we're asking. And so I'll bring it into my partners, and then at the end of that process of ripping it apart, I will probably have 5 follow-up questions because my partners will have thought of things that I have not thought of. And, so at the end of that process, we either get to, all right, this is interesting for us, let's dive in a little bit more, or for XYZ reason, we cannot do this here.
Right. Hold that thought. I think we need to get down here. This
Okay.
is the last stop. We
Okay,
can
okay.
continue it right here.
Okay.
Well, let's go. Yeah, I think we need to get off.
Okay, should we get up
here.
here? Okay, yeah.
I'll follow you, bro. Let's go.
Okay, let's go. So yeah, we've written the memo. My partners have added a bunch of questions. We've decided directionally whether this is for us or not for us. And at that point, I've walked away. And assuming we're interested, I will send over a written doc
Right.
of essentially all of the other open diligence items that we have on our end.
Right.
And we'll send that over to them. And then I generally expect within 24, 48 hours, I'll get sort of written responses.
Yeah.
Again, it's really important that it's happening in writing because it's much harder to bullshit in writing than it is to talk through things and wave your hands around things. Although, we generally get on a call afterwards to kind of discuss things in depth.
Right. And how long does this entire process take of you going back with the memo and then grilling the memo and then coming back to the founder?
Usually, we try to get it done within a week.
Okay.
So, assuming after the first IC, if for whatever reason it's not a right fit, we try to get back very quickly right after. But generally, the entire process, I think for most deals, takes about 7 to 10 days to get to a yes on average.
Okay.
And then, there's negotiation around putting a deal together and actually getting the, doc signed, and that takes a little bit longer. But I think directionally we know that we want to do this somewhere between 7 and 10 days, and sometimes it's faster. And as you know, there was a time 2 years ago when things were getting done in 48 hours.
Yeah.
Fortunately, that's not happening anymore.
Yeah.
So, so I'll have questions, get written answers,
Right.
and then once we're there, I will bring it back to IIC again, and then if it holds muster, then we usually get to a yes.
Right.
And if for whatever reason we're not there, we'll get to a no. And the way sort of there is the way decisions get made in IC is everyone has a voice, and everyone is able to sort of articulate how they feel about something, and there's some broad notion of okay, are we all directionally kind of there that this makes sense for us, and if it is, then we get it done. If not, we don't.
When you say yes, when do you wire the money after that?
So the wiring of the money is, so we do a deal, right?
Okay.
Let's say we've decided yes. Generally, it takes probably a week to get a signed term sheet after that.
Okay.
We'll try and prepare a term sheet within 48 hours.
Right.
But then they'll have to have their lawyers review it. There'll be red lines. There'll be back and forth. Sometimes that takes a week, sometimes that takes 48 hours, sometimes that takes longer than a week. So there's a lot of variance between stage.
Right.
And usually for an early stage deal, like the documents are pretty boilerplate on the safe. Post safe, there are actual legal documents, right?
Okay.
Like a safe is not sufficient to wire the money immediately. And then that's a process of like a legal review between our side, their counsel, making sure that things are inked correctly. We have the right entities, we have the right bank accounts in place.
Do you wire like fiat money or crypto?
We've done both in the past.
Okay.
So I think usually it's fiat. But
Usually it's fiat, which is different, right? Because mostly funds do crypto.
I think there's like a good amount of funds that do fiat. But we don't care. We'll do either.
If you do crypto, which chain do you prefer? Don't say Solana, man.
I can't not say.
I literally walked into that one. You would chill your Solana when not a chance. Also, this was like
you can't.
I fucked up. Sorry, my bad.
So we'll wire as soon as we get the green light from our legal team,
right?
Which is usually after docs are signed and they have either a bank account or they provided us a address to send stables to.
Right.
And so, at that point on, like we're ready to go. And I've seen teams do a lot of magic post that point. So it's good. It's a special thing, you know. Like I've not been at the receiving end of it.
Yeah.
But I know like the first, because I'm usually like at this point, by the time we're wiring money, I've already started like talking to these guys like pretty frequently.
Right.
And there's like a sigh of relief.
Yeah.
There's like a okay, we have something, some runway, because usually at that point they'll have already got on 4 or 5 people. They're working with them.
Right.
They're figuring out how to pay rent. And like get just like a little bit of relief that comes into it. It's a really special thing.
Nice. And what does the due diligence process look like, even from like a legal POV?
Yeah, so I'm very fortunate to have our legal team, Greg, Jay, Dan, these guys spend a lot of time doing, operating work on entity formation, kind of structuring, sub-entities, DBA, background checks, all this other stuff. I'm fortunate enough to not have to do that myself. But it's really just it's a process between our counsel and their counsel to essentially request documents that are that are needed, and usually sometimes in the case of like if it's not a fresh deal, if we're not the first money in, we'll want to understand how prior financings were done, what warrants look like in that situation, what is the equity dilution, are there any sort of strange clauses that we haven't seen before. So it's really just like a thorough review of all of these things, and so it's a back and forth between our lawyers and their lawyers. Sometimes things come up in discovery here that we need to understand or need to re-underwrite in terms of how we've structured the deal in order to make sure that we are meeting what our threshold was for getting a deal done. But the bulk of it is between our lawyers, just to make sure that all of the boxes are checked, meaning entities formed correctly. There's no weird clause from a previous investor that like makes life hard for us down the line. And usually once that stuff is sorted out, we are able to wire. So basically what happens is after we sign the term sheet, I call up Greg on our side and say, hey, we're doing this deal. And then Greg sets up a legal diligence call, usually that I'm on with the team. And then he gets a sense for the business and where the state is, and then he leads a diligence process, operational diligence, and then once we're done with that, we're ready to go.
And they all do equity or token? Like, what do you prefer?
We do everything. Okay. I'd say the vast majority of our investments are safes, equities with
token
warrants on the side.
Okay. Yeah. And can you explain what a term sheet is? When you receive that term sheet, what is that document?
Yeah.
That everyone is chasing.
Yeah. So a term sheet is a simple agreement for future equity. This is usually what people are talking about when they refer to a term sheet. This is like a form document that I think the Y Combinator guys had sort of open sourced and put out into the world in like the mid 2000s, so
Right.
that founders had like a simple, plain English understanding of what a financing deal looks like. And functionally, what the term sheet represents is usually 2.5 pages. There's some term sheets that are longer, some term sheets that are smaller, depending on who's authoring it. But really, what it outlines is what is this investment, meaning how many dollars are we putting in for how many shares in the company, how much, like what broad provisions do we have around, guarantees do we need around the the construction of the business, which is to say how much you're going to dilute in the future, how much are you going to like how much is our protection, how much is our ownership going to be protected in XYZ circumstances, what are our restrictions on selling our position or potentially moving it around, and you have broad specifications around the token warrant sometimes in there in the language, which is what percentage of tokens should be allocated for the community, what percentage of tokens should be allocated for the team, how do you define what's called a employee stock option pool or ESOP, which is what percentage of tokens are you going to keep sort of locked up such that when you need to incentivize new talent to come into the business, you can tap into that pool and make sure that you're able to really compensate your team members with ownership in the business. So there's a broad set of these terms. These are public documents, so you can kind of go and see what a standard looks like. And so, really, at the earliest stages, for like a seed or a pre-seed investment, they're very boilerplate terms. For an A or a B, it becomes a little more complicated because there's existing financing, and you need to like sort of reference how much dilution has been taken on, how much dilution you're adding to existing investors, what that means in terms of the equity and to quote-unquote token conversion. There's a little more variance there. But yeah, it's basically just a document that outlines the broad strokes of the deal, which once it's signed, our lawyers go on and draft, specifically what is this equity. There's like more complicated docs that come on down the line, but that's sort of a broad strokes agreement. It's generally a non-binding document. Oh, the other thing is like a no-shop clause, which is like, let's say you sign this term sheet, we are now in business, meaning it's not okay for you to go and fundraise from another party within like a 45-day period of this or whatever.
Okay.
So I think that covers 90% of the terms in that term sheet.
Okay.
I'm happy to send you like a draft one that you can see anywhere, and yeah. That's good.
Awesome. I know we still haven't spoken about Deepen, so I think like we'll have to do like one small segment of that. But if you want to actually listen to him talk about Deepen, there are multiple podcasts that he's already done about that. There's a very beautiful trucker business reference that you've done, right? And not a lot of people have seen that. You need to dig that out from the YouTube. But what I want to actually touch upon is something that I mentioned earlier as well, how Multicoin really backs its projects, right? IONET was like one of your biggest bets. And right before the token launch, there was all this Martin Shkreli shit going around, right? What was ground zero in Multicoin's office and in your group chats? What was going on? And just break down that entire scenario.
So the story there was, we had invested, we were the first money into that business. I'd actually met the founder at Hacker House in Austin. And we put $2 million into that business. We are, fairly large holders of the asset. And we sort of worked with them and the team over the course of the last year in order to, as they built out the product and scaled the business. And we realized, going into the launch, which was I believe in June. This is a thing that happens in every aspect of crypto. There are always vocal people who are shutting it down. In this case, the person who was leading most of the accusations was a guy who had a ton of distribution, which was unique for me because I've obviously seen a bunch of people say things about a bunch of my other portfolio companies. But it was a really interesting time because one, some of the criticism was very valid, which is to say, the points program that they had been running was inviting instances and people who were spoofing and farming the network.
Right.
This is always a hard problem for any. I can tell you horror stories about Helium. I can tell you horror stories about Render, about a ton of permissionless networks. When you're adding resources to them, it's a very non-trivial civil resistance problem. It's a civil resistance problem across all of crypto, but specifically to DeepEns, it's a harder problem to solve because with virtual resources, it's so easy to kind of spoof resources. And so I think he drew attention to some really important problems, but it also sort of highlighted, in the response, certain problems in the way that management was handling it. And so, ultimately, I think it's a decision that the team made, which was at this stage there is certain changes that need to be made in order to make sure that we are able to succeed in this next stage of growth. And look, it was me and a handful of the other investors, and you sort of guess who they are. I won't sort of take them by name, but we're in pretty close communication with the team across all of this. A moment of crisis is always it's an opportunity to reflect to the world that you have the substance and you have that you're a good actor. It's not something to waste. And so we sort of helped them craft sort of whatever they needed in terms of a strategy and a messaging strategy and a broader PR strategy in order to make sure they weren't letting this sort of happen unfettered, right? And so that whole scenario ended up one, creating new product to make sure that the network was more stable and more grounded, but two, also created certain operational changes within the company such that they were able to succeed going forward. And I think they've done a very strong job since then of continuing to build out the team, continuing to build out a sales motion, and frankly just making sure that the resources that they've aggregated, all of these GPUs across all of these enterprise latent data centers all over the world, are being used for production dollar denominated workloads that are coming from a bunch of different customers. So I think those guys did a phenomenal job, and moment of crisis is super normal. As you know, in crypto, is the most adversarial space there can be. And so, yeah,
I think everyone is in crisis right now. It's just a moment of when you realize that, oh fuck, we're actually fucked, right? And you guys have been in the trenches with so many projects, Solana, when it was at $8, you all still were just backing it, right? I feel that is the biggest value add a VC can give, other than of course a term sheet and money, right? Just keep backing them, right? All right. So this is going to be the last segment of the podcast, and this is probably the most fun podcast segment of it. And I call it "Don't Be Diplomatic." All right. So it's going to be a rapid fire, and you already know what to do.
Yeah.
All right. BTC or ETH?
BTC. Neither. BTC.
Okay. Token or equity?
Token.
Most bullish ecosystem? You can't say Solana.
SVM ecosystem.
Bro, shut up.
Helium.
One ecosystem you're bearish on?
Oh, ETH.
An investment that you've already marked down to zero?
FTX. I don't want to tell you.
No, that's not dead.
It's a tough one. Let's come back to this one. I can't think of...
Okay, I will actually come back to this.
Okay, we'll do it.
Okay, an investment that exceeded your expectation?
Fastlane. Well, I always had a bunch of ideas for them. I don't know if you know these guys. They build MEV infrastructure started off with Polygon, and now they're doing a lot of work on Monad and such. The amount of intellectual capital they've drawn has been really impressive to see. So Fastlane Labs.
One investment opportunity that you passed and now you regret?
Pump.fun.
One narrative you're most bullish on other than DeepEn?
Liquid secondary markets for tennis courts for new things, new markets.
Okay.
basically. Yeah.
One deal breaker when you're investing in a founder?
A lack of conviction. I think if I'm asking you a question and you're like maybe it doesn't, I can't get around it.
Classify the following funds in different tiers, okay? Pantera,
Oh, dude. What tiers?
tier 1, 2, 3, 4. 1 being the highest.
Yeah, I mean they're great. Tier 1.
Tier 1. Multicoin,
Tier 1.
Paradigm,
Tier 1.
Hack VC,
Tier 1. Everyone's tier 1.
Archetype,
Tier 1. You're not gonna get
Anagram.
me to say, Tier 1. You're not gonna get me to say a bad thing
Bro.
about any of these folks.
Coin Fund.
Tier 1.
Okay, name 3 tier 2 funds.
I don't spend time thinking about tier 2 funds.
This is what shows he was a BD before. All right, bro.
My
this was
compliance team is gonna have a
amazing
hard
doing
time with this
you.
one. Thank you
We'll
so
do
much,
more
man.
of this very
Yes,
soon.
let's do it.